the S&P 500, the Nasdaq, one just recovering here on the day. Now, the biggest thing that I'm watching here, if you don't know, I've been inherently bearish on what's been happening over the course of the past few weeks since PPI data. And when we look at this action, we had a decent day yesterday, and then coming into today with a strong open, I'm telling you there's major reason for caution here. Let's jump into why. So we've already gone into the ES and SPY breaking down out of this previous demand zone right here. But I want to talk a little bit deeper about where we're at and how we're moving now. So we see the 200 SMA right here, which you clearly have been bouncing on 1, 2, 3, almost 4 times here, right? But on top of this, now you're kind of bear flagging back into this zone. Not ideal, guys. Not ideal. You can see your breakthrough demand's gone. You're going to see getting a retest of previous support, right? And this is concerning. It's almost like a perfect looking play out here. And if you look at how you played out, you kind of had the head and shoulders kind of working out here, a little bit ugly, but it still clearly is there on especially futures. And that's ultimately where we're at and what we're talking about here today. Now, we look at some of the action. We'll go over what happened with that data and the overall readings. But before we get into that, I ask you to do 2 things. Consider liking and subscribing. Helps out the channel a bunch. Not going to waste time on that. The Discord link is also down below. You go to our website, go to join now if you are interested, and you get access to what we're trading, how we're trading, everything in between. Today, I started establishing another position in NVDA. On the downside, we rejected 440. We got back below 336. It's looking pretty good. I'm liking where we're at. I'm liking to see kind of this action. The risk reward still makes sense there as well. So again, that's what we're doing and that's how we're trading. So let's start jumping back into some of these key levels and things across the board. Again, then we go to something like NQ, and you can see NQ, yeah, you came into some of these major levels. We got a bit of a break down here as well, and this is just Nasdaq if you don't know. You started breaking back down. You can see this was kind of where our support was, right about there. 14.6, almost flat. You got a little bit of a wick under, and we're pushing back up. But again, what's the thing that's happening here? What's the ugly part? I mean, you're pushing up and just getting slapped back down. Not ideal. And just giving you that visual, you're just coming back into some of these previous levels. You can drag and drop. And as you see, you're coming right back into those previous highs there, June 5th. Very identical. I mean, the action you really don't necessarily want to see here, and you're seeing it over and over. So again, I don't think there's confirmation yet that you have to dump, that you have to drop. But the more I look at these charts, the more concerned I become, especially with the reaction that I believe we could have had today. I don't believe there was too much resistance to the upside. I don't believe sellers were really aggressively shorting the market. I just don't. When we look at the board, when buyers have had their opportunity over the past 2 to 3 weeks, they have not stepped back in. It's very similar to back here to when sellers were trying to step in, right? Even back here when we had I think this was Jackson Hole back here, right? They tried to step in and then they just couldn't get any continuation. You made a higher low and you pushed back up. It's very similar to those cases, in my opinion. We look at volume and go over what's happening here on the day. You had decent volume beginning of the day and kind of proceeded throughout. Selling definitely started to step and ramp up. And that was also the interesting part of it. You start off with decent buying, right? First hour, 2 hours of trading. But then it increases as you're progressing and chopping. Very interesting behavior. And again, you see buyers trying to push, but just not giving enough. Again, it's almost like we're repeating some of these cycles that we've seen, and I just want to make that really clear. Now, jumping into some of the fundamental viewpoints here. The dollar, DXY, another really concerning part here, right? We mentioned yesterday, we were watching the previous highs here. Everyone's saying, you're getting bearish on the dollar, you're pulling back. All things considered, you pushed up, you broke out clearly, you came back down, you're holding said level very, very strong. It's what you want to see. You always want to see the break, retest, and then continuation. That's the best way to trade. And so as we look at this action, it looks really good as well. You zoom back out, we look at what's happening with some of these yields. Again, people saying yields are cooling off. They're looking better. Again, I have to disagree. We look at where yields are, and they're still breaking up. I mean, yields look better than the dollar, all things considered as well. So again, that's the inversion at 97%. The 10-year still looks really good, grinding on the 90-MA on the daily. The 5-year, you're not getting a great push yet. You got a decent push, but you're kind of just stagnating here at highs, a little less than the others. And then the 2-year, same thing I said yesterday, kind of just flatlining, sitting at highs. We're waiting to see that short-term bounce coming up there. Last thing I will mention is going to be VIX. VIX, you want to see this at least 20 to really start expecting volatility, some downside movement, aggressively, like a 2-3% day. 24 is where things really start to, to get bigger, to get better. So those are areas that I'm watching and what I'm watching and kind of keeping an eye on there. Oil also kind of pending back and forth between 94 and 90, just pin volume. We'll see what happens going on there. America's trying to work a deal with them. Again, America has had some a bad history with working any deals with the Sauds, so we'll see what happens there. Going into some equities. Now I mentioned that I got a NVIDIA put. Now I'm going to just go over some positions, things I'm liking. Do what you want. That's essentially it on futures. Again, where you're getting confirmation on those futures, Nasdaq below 14.6, confirmation, continuation to the downside, most likely 14.2, 14.25. ES, you get below the 200 SMA on I believe the daily. I think it's on the daily. Again, confirmation to more downside, most likely going to 4,200. Honestly, that's really as simple as it needs to be right there. Okay, so we look at NVIDIA, what's happening here. And I want to start on the daily before I do anything. And I think the daily is really painting a good picture. So we saw that clear downtrend that we were in. We kind of broke out of it, pushed a little bit up here. Now, what we saw over the past few days was really interesting. The 100 SMA right here, you're just grinding 1, 2, 3, 4, 5, almost 6 days of grinding on top of it. You break up, you push to 440. And we do it with very minimal volume. Okay, so again, as we just throw the volume indicator on here as well, as you can get a little bit of a visual, it's not too much, right? We had that really great volume when we were pushing at those highs. Consistent and good, great volume. Even, sell side came in, still great volume, continued to the upside, right? Very, very high. We're not getting any of that good behavior here. So I do expect volatility and volume to kick back into NVIDIA sooner than later. But the downside still looks really good in my opinion, especially the rejection here at 440 so far and closing below 336. Ideally, you want to see us get back below 330. Ideally, 426, but we'll start where we're at, and this is where we're looking for going forward. Tesla, a pretty interesting day, to say the least. I think this is one of the easier charts to be following as we speak. I'm going to take off VWAP and the 90 MA to make things a little bit more clear. I think on Tesla, all you're really looking for is to get back below the 100 SMA on the weekly. You get back below basically 249. I think you're looking for a downside easy, back to 242, 243 roughly. A simple trade there. Under 240, I'm very bearish. I'm, again, using higher time frames so you can see these levels and why you're respecting them, right? Because if you're looking to swing and catch a big trade like that, you have to focus on higher time frames. And that's the real focus today, right? And there's no head and shoulders here, so please don't tag me and say that. But yes, you can see 240, 239 clearly held once, twice, 3 times here. You get below that, I think continuation down to 432, possibly down to 220, give or take. So definitely keep your eyes on that. But confirmation is below 249. There's no need to overcomplicate it. One of the easier charts to be watching, in my opinion. So definitely keep your eyes open on that. Another one is going to be Apple. And we've traded this a lot to the downside, and everyone knows we have shares as well. But what I will say is Apple was very interesting, and it's remained pretty interesting. So going to something like the 2-hour shorter time frames, ideally what you'd want to see is the breakdown that we had and then a retest of 172 and the continuation. Now, I didn't go short in Apple yet, and I might, just to hedge the position. But I'm going to tell you right now, Apple, pretty picture perfect. Nice little trap here. 172, a break above. You're right back down. Rejection, rejection, rejection. Apple looks bad. Again, and it's something that I consistently say, and me and Jay both say. If the most, the biggest name in the market, the biggest equity in the S&P, if it's bearish, it's hard to be bearish on the S&P in general, or to be bullish on the S&P in general. So things that I'm looking at and underlying indicators that can help you trade throughout the day, or at least get an edge on where the big money's going here. I think these are things that you have to be focused on, especially in the short term right now, because right now it's a lot of range bound movement. It's a lot of choppiness. And I think people are getting caught in bad trades and they're not taking valuable trades. That's another really big thing that we're neglecting here. So again, my personal opinion, what I'm looking at. If you have questions, please comment on these if you have them. But that's basically going to be it for me. I don't want to go too in detail with too many things. I'm really watching how data keeps coming out. The last one I'll mention is AVGO. You rejected once again at 838, 840. Again, absolutely beautiful. Last time we went all the way down to 803 again. Confirmation would be under 820. You still look really bad. Semiconductors, in my opinion, again, I think you're like right back where you started on some of these names. Granted, you're getting back to like the top of these ranges, but I still think semiconductors are really, really bad. A lot of downside potential. They held up while they could. I don't think semiconductors can hold up through another sell-off, personally. Again, I do believe if you get the sell-off on semiconductors, NVIDIA will lose 400. I do believe AVGO has over $100 of downside potential. And again, I'm not just throwing targets out there. I'm just trying to give you the reason and logic behind those as well. If you have questions, comment down below. Have a good one, traders. I'll see you on Monday.